So friends, today we are in part 2 of our session on managerial appointment, ceilings on managerial remuneration, corporate social responsibility, and computation of profit as per section 198 under the Companies Act 2013. In our first video, we discussed as to what is the significance of managerial remuneration and why there is need for control and not giving free hand to the promoters in appointment of managerial remuneration and deciding their remuneration. We also understood in our previous video as to what is profit as per section 198, and it is very clear that as per section 198 profit is not same as the profit of the financial reporting. So the profit as per section 198 is completely different from the profit which is reported in the financial statements of a business. Then we understood as to why section 198 is there in the Companies Act, and we understood that section 198 or the provision for computation of profit as per section 198 is there in the Companies Act so as to ensure that there is total standardization among all the companies in this country as regards to computation of profit for the purpose of managerial remuneration ceiling and also for the purpose of corporate social responsibility expenditure. How section 198 is relevant for section 135 and section 197 of the Companies Act is also very clear. Section 135 requires that every company in this country has to spend a minimum of 2% of average profit of last 3 years. Now what does it mean? 2% of which profit? Is it the profit which is reported in the financial statement of the company? Answer is no. Then which is this profit? This profit has to be calculated specifically for the purpose of section 98, for the purpose of section 135, and that is as per the provisions of section 198. And same is the case with regard to section 197. So how section 198 is relevant for the purpose of section 197, and that is because section 197 also fixes a ceiling of the managerial remuneration, and that ceiling of managerial remuneration is linked with the profit of the company. Again, which profit? Not the profit which is reported in the financial statement, but it is the profit which is computed as per the provisions of section 198. We also understood in our last session the logic and rationale behind computation of profit as per section 198. I have seen in my experience that different people calculate different profit as per section 198 for the same company, and that is because of lack of proper understanding of the provisions of section 198, lack of understanding of logic and rationale behind the provisions of section 198. If the rationale and the logic behind the provisions of section 198 is understood, I am sure everybody who calculates the profit as per section 198 for any company will arrive at the same figure. So friends, this is what we discussed in our last session. Today, what we are going to do? Today we are going to look at only section 198. We are not only going to look at section 198, but we are going to look at subsection wise, one by one, and understand each and every item as to why a particular item of expense has to be deducted or why a particular item of income has to be added while computing profit as per section 198 and vice versa. And that is what we are going to discuss today in this session. Now, Section 198, subsection 1A. It talks about credit shall be given for the sums specified in subsection 2. तो जो सेक्शन 198 1A है, what does it say? It says कि all the items, all the sums which are given in subsection 2 of section 198, for all these sums credit will be given in computation of profit as per section 198. Now what does it mean? It means all the items, all the sums which are specified in subsection 2 of section 198, now all those sums will have to be added to the income for the purpose of computation of profit as per section 198. Meaning what? Meaning अगर किसी कंपनी ने उनके जो प्रॉफिट कंप्यूट किए हैं उसमें any sum which is prescribed in subsection 2 of section 198, if that amount has not been included in computation of profit, then this item will have to be added for the computation of profit as per section 198. That's number one. Number two, section 198 and again subsection 1A, it says credit shall not be given for those items specified in subsection 3. So meaning what? Meaning if there is an item of credit, item which is included in income for the purpose of computation of profit as per section 198, and this item is listed as part of subsection 3 of section 198, in that case credit will not be given for such an item. Meaning what? Meaning if this item has been included in the profit computation by the company, then for the purpose of section 198 this item will need to be deducted from the computation of profit. That's your section 198 1A. Number 3, section 198 1B. Now section 198 1B says the sums specified in subsection 4 shall be deducted. Meaning what? Meaning all the items, all the expenses which are mentioned or specified in subsection 4 of section 198. Now all these items have to be deducted from the figure of income of the company for the purpose of arriving profit as per section 198. Meaning what? Meaning if any of these items have not been deducted in computation of the profit as per section 198, then these items will need to be specifically deducted for the purpose of computing profit as per section 198. And please understand why there is a focus in section 198 on deducting certain expenses or not deducting certain expenses, likewise adding certain income and not adding certain income. And please understand the logic. The logic is very simple. The ceiling for the purpose of managerial remuneration is decided based on the profit as computed under section 198. So please remember, if an item of expenditure which otherwise is to be deducted, if this item is not deducted while computing profit for the purpose of section 198, what is going to happen? The amount of profit that would be computed by not deducting any such item of an expense, it is going to inflate the amount of profit. So if it is going to inflate the amount of profit, what is the consequence? The consequence is the ceiling which is going to be determined for the purpose of section 197 is going to be higher than what it should be. That means it may result into excess payment of managerial remuneration to the managerial personnel. Likewise, if an item of income is not to be included while computing profit for the purpose of section 198, and if this item is included in the income while computing profit as per section 198, what is going to happen? Now this income is not to be included otherwise. it has been included as part of the computation, which means what? Which means again this item will also inflate the amount of profit under section 198. As a result of that, the ceiling that would work out as per section 197 for the managerial remuneration is going to be higher, which apparently would mean higher remuneration will be paid to the managerial personnel than what they would be eligible otherwise. And that is what, friends, you have to remember as to why there is a focus in section 198 on deducting certain expenses, not deducting certain expenses, adding certain income and not adding certain income. Let's come to item number 4. So the item number 4 in section 198 is section 198 1b, and section 198 1b says those items which are specified in subsection 5 shall not be deducted. So meaning what? Meaning all the items which are included, it means that these items of expenses will not be deducted from the income for arriving at the profit as per section 198. So remember, section 198 is quite fair. So if you wrongly deduct an expense while computing profit as per section 198, what is going to be the resultant outcome? The resultant outcome is going to be that the profit as per section 198 will be deflated. As a result of that, the amount of managerial remuneration ceiling will go down, and that would be unfair as far as the managerial personnel of the company are concerned. And likewise, it would also impact the same way as far as the corporate social responsibility is concerned. That means what? That means normally, otherwise, company would have been required to pay higher amount on CSR, but since an item has been wrongly deducted from computation of the profit as per section 198, the profit would deflate. If the profit of 1 year are deflated, obviously the average for 3 years also will go down. As a result of that, 2% spending of the average profit that the company would be required to do will be reducing, and that is the point that we have to remember. So these are the 4 broad provisions in section 198 with regard to as to what should be added and what should not be added, what should be deducted and what should not be deducted. Now friends, what we will do, now we will look at all these 4 broad heads. We'll break them into subparts and look at them one by one. So let's look at section 198 subsection 2. Now what section 198 subsection 2 it says, in making the computation, credit shall be given for the bounties and subsidies received from any government or any public authority constituted or authorized in this behalf by any government, unless and except insofar as the central government otherwise directs. So what the section 198 subsection 2 says, that agar if there is a bounty or there is a subsidy which is received by a company from a government, now this subsidy or this bounty that is received from a government as per section 198 subsection 2, this will need to be included as part of the income for the purpose of determining profit under section 198, except and otherwise if the central government has specifically refused inclusion of such a bounty in the income of the company. And that is your section 198 subsection 2. Let's go to subsection 198 and subsection 3. And what the subsection 3 says, credit shall not be given for the following sums. So remember, section 198 2 says that the credit will be given, and section 198 subsection 3 says credit shall not be given for certain items. And let's look at them one by one. So under section 198 subsection 3, first item is A, and that it says profits by way of premium on shares or debenture of the company which are issued or sold by the company, unless the company is an investment company as aforesaid, investment company, now then such profit or the premium will not be included as part of the income for the purpose of computation of profit as per section 198, and I am sure you can understand. So if there is a profit by way of premium, so in case if a company is raising capital raising capital by charging premium, so this premium which the company is charging will obviously not to be included in the income for the purpose of computation of profit as per section 198. Why? Because this premium which this company is getting, remember, is not its operational income. It's not an income which is coming from the operations. And while I am saying so, I would also like to tell you another rationale that you have to keep in mind while computing profit under section 198 for the purpose of section 135 or for the purpose of section 197. Remember another rationale. Another rationale is when you are computing profit as per section 198, the focus in computing profit as per section 198 is always on operational income and operational expenditure. So only broadly you would realize and see that only operational income are to be included and the operational expenses are to be deducted and not otherwise. Number 2, under subsection 3, profits on sale of the company of aforesaid forfeiture. So अगर एक कंपनी ने शेयर्स फॉरफीट किए हैं और वो फॉरफीट शेयर्स को के ऊपर on the sale of those forfeited shares, if company is able to earn profit on these forfeited shares, now this profit also will not be included in the profit or in the income for the purpose of computation profit as per section 198. And I am sure you can understand now the logic as to why this has not to be included in the income for the purpose of computation of profit as per section 198, because this profit that the company is earning on the sale of forfeited shares is not an operational profit. It is not coming from the operations of the company. So really speaking, in this profit, principally and technically speaking, there is nothing that the managerial team has contributed. And remember, if managerial team has not contributed to some profit, that profit should not be credited to them, and by including this profit in the computation of profit as per section 198. Number 3, under subsection 3, profits of a capital nature including profit from the sale of the undertaking or any of the undertakings of the company or any part thereof. तो जैसा कि मैंने पहले दिन जब आपसे डिस्कस करा था और हमने डिस्कस किया था कि अगर कोई कंपनी अपनी किसी अंडरटेकिंग को सेल करती है, किसी बिजनेस को सेल करती है या किसी एसेट को सेल करती है या किसी डिवीजन को सेल करती है, एंड इन द सेलिंग ऑफ दैट डिवीजन और प्लांट और कंपनी or asset, if this company is earning any profit, remember this profit will not be included as part of the profit, as part of the income for the purpose of computation of profit as per section 198. And I am sure you can understand, प्रॉपर्टी सेल कर रहे हैं, एसेट सेल कर रहे हैं, डिवीजन सेल कर रहे हैं, प्लांट सेल कर रहे हैं, एसेट पूरा सेल हो रहा है। तो जो एसेट पूरा सेल हो रहा है उससे अगर कुछ प्रॉफिट आ रहा है तो उसमें मैनेजरियल टीम का कोई कंट्रीब्यूशन नहीं है, और अगर मैनेजरियल टीम का कोई कंट्रीब्यूशन नहीं है तो फिर ऐसी इनकम को सेक्शन 198 के लिए इनकम में इंक्लूड नहीं कर सकते हैं। नंबर 4, profit from the sale of any immovable property or fixed assets of a capital nature comprised in the undertaking or any of the undertakings of the company will also not be included. तो अगर कोई immovable property सेल करी है और उसके ऊपर कुछ प्रॉफिट कमाया है तो वो प्रॉफिट को भी for the purpose of computation of profit as per section 198, that profit will not be included or that income will not be considered. And why is that so? For the same reason as we discussed little while ago. But please remember, this will not be applicable. This what we have discussed just now will not be applicable in case of a company which is a company whose main business is to buy assets and sell assets, right? So buy properties and sell properties. So this provision will not be applicable in case of a company which is purely engaged in the buying and selling of the assets. Then number 5 under subsection 3, any change in carrying amount. This is very important, and that is what you must understand, because remember what we have now, we have a new accounting language, and that is INDES, Indian Accounting Standards. Indian Accounting Standards, as all of you would know, in any case are focused on fair value accounting. So unlike in the past where the focus in accounting was on historical accounting, now the new language of accounting is that the focus has to be on the fair value. So today it is considered inappropriate to show an asset at the historical value. And why? Because if you are showing an asset at the historical value, really speaking, the balance sheet of the company is not reflecting the current position of the assets and the liabilities of the company, and therefore there is a focus on showing the assets on fair value basis. So point number 5 under subsection 3, remember, any change in carrying amount of an asset or of a liability recognized in equity reserve, including surplus in profit and loss account, on measurement of the asset or liability at a fair value. तो आप fair value measurement में आप क्या करते हैं? Under Index 113, which is on fair value measurement, what do we do in case of fair value measurement? So you have an asset. Now let's say this asset was bought by you 10 years back at 10 crore. The fair value of this asset is 20 crore. So really speaking, there is a unrealized gain that the company has of 10 crore. Now the question is, should this 10 crore of unrealized gain be included for the purpose of computation of profit as per section 198? And the answer is no. And why the answer is no? Because section 198 subsection 3 clause E very clearly says that any increase any increase on account of fair value accounting of the asset or decrease in the liability will not be included as income for the purpose of computing profit as per section 198. Point number 5 is any amount representing unrealized gain, notional gain or revaluation of asset. So एक कंपनी है, कंपनी ने एसेट्स का रिवैल्यूएशन किया है, कंपनी ने एसेट्स का रिवैल्यूएशन किया है, तो इसका मतलब जो कंपनी की एसेट है वो बढ़ गई है. लेट्स से वो एसेट 10 करोड़ से 20 करोड़ से बढ़ गई है. सो इफ द वैल्यू, बिकॉज ऑफ द रिवैल्यूएशन, द वैल्यू हैज इंक्रीज बाय 20 करोड़. सो नाउ द क्वेश्चन इज, विल दिस 20 करोड़ बी पार्ट ऑफ section 198 income? And the answer is no. Why? Because it is unrealized gain, it is notional gain, it is something that may exist today and may not exist tomorrow. So this will not be included as part of income for computation of profit as per section 198. Now we come to subsection 4 of section 198, and it talks about the sums that will need to be deducted from the income for the purpose of computing profit as per section 198. Now here friends, I would like to mention, now really speaking, the writers, the authors of section 198 would have perhaps helped all of us a bit more if they would have somewhere included this rationale and logic behind the section 198 instead of listing out certain items. Why? Because if you list out certain items, there is a tendency on the part of everyone to think that only these items are to be deducted and other than these items are not to be deducted, and that is how people would think. But remember, the section 198 subsection 4 talks about these sums to be deducted, but as we will discuss and you will notice, all these sums that are to be deducted are the ones which are nothing but operating expenses. So number 1 is all the usual working charges. Simple सी बात है, operating expense है तो obviously operating expenses हैं, they will have to be deducted from the income for the purpose of arriving profit as per section 198. Directors remuneration, bonus or commission paid or payable. So director's remuneration has to be deducted for the purpose of computing profit as per section 198. Number 3, bonus or commission paid or payable to any member of the company's staff or to any engineer, technician or person employed or engaged by the company, whether on a whole-time or on a part-time basis. Now remember, this again becomes a source of confusion. It's very simple. The company has to pay bonus, company has to pay commission. So the bonus that the company is paying, the commission that the company is paying are its operating expenses. Since these are its operating expenses, these expenses have to be deducted while computing profit as per section 198. Now since the clause includes or to any engineer, technician or person employed or engaged by the company, now this creates a doubt in the minds of the people who are calculating profit as per section 198, and they start thinking, is it only applicable to an engineer or to a technician? It is not so. If a company is paying bonus, if a company is paying commission based on the operations of this company, every bonus, every commission which is paid by the company, which is with regard to its operations, has to be deducted while computing profit as per section 198. Point number D. Any tax notified by the central government as being in the nature of a tax on excess or abnormal profit. Now please remember, so what it is talking about, it is not talking about normal tax. So the normal tax is not to be deducted. So the normal tax, meaning the corporate tax that the company will pay as income tax on its profit, that profit is not to be deducted. That tax is not to be deducted. Which tax is to be deducted? Tax which is specifically notified by the central government as being in the nature of a tax on excess or abnormal profit. So the normal tax which the company is liable to pay on its profit is not to be deducted while computing profit as per section 198. Which means what? Please remember, it simply means the section 198 is not trying to compute profit after tax. Section 198 is trying to compute profit before tax, but profit which is based on purely the operating expenses and purely the operating income. And why purely operating expense and purely operating income? Because these operating income and expenses can be given, can be said to be credited to the managerial team, and that is why only the purely operating expenses are to be taken care of. So I am repeating it once again. When you are computing profit as per section 198, the normal income tax that you would pay will not have to be deducted. What will have to be deducted? Only in case if the government has notified a particular tax which is on the abnormal profit, that only will need to be deducted while computing profit as per section 198. Point number E, interest on debentures issued by the company. Now remember, is there really a need to include this item in section 198? If you ask me, no. Why? Because any interest which company is paying on any loans that the company has taken for the purpose of its operations, those interests will have to be deducted. So it doesn't really matter whether it's a debenture or it is a convertible debenture, non-convertible debenture or term loan or bank finance or any other means of availing loan from any other source, so long as the loan which has been taken is for the purpose of operations of the company, any interest which is paid by the company on any of these loans will have to be deducted while computing profit as per section 198. So really speaking, there is no need to write interest on debentures issued by the company. Now remember, the moment you say interest on debentures issued by the company, how will reader will interpret this particular item? He would think that only interest which is paid by the company on the debentures, only that interest has to be deducted. Every other interest is not to be deducted. And let me tell you, that will be the gross interpretation of this particular provision of section 198. Every interest on debenture or otherwise, so long as that loan has been taken for the purpose of the operations of the company, for the maybe for the fixed assets, maybe for the working capital, all those interests will need to be deducted while computing profit as per section 198. The next point is G, interest on mortgages executed by the company and on loans and advances secured by a change on its fixed or floating assets. So remember, and then you have another item, interest on unsecured loans and advances. So please remember, you have three items. You have you have a subclause F that says interest on debenture issued by the company. Then you have subclause G that says interest on mortgages executed by the company on loans and advances secured by a charge on its fixed or floating assets. And then you got a subclause H that says interest on unsecured loans and advances. Now there was absolutely no need to have these three separate separate provisions or separate clauses in subsection 4. And since you have these three different clauses in subsection 4, that becomes a source of confusion in the minds of people. It should have simply said all the interests paid by a company with respect to all the loans that the company would have taken for the operations of the company, those interests will need to be deducted. Anyway, but so long as we understand it clearly, I think that's fine. Subclause I, and it says expenses or repairs whether to immovable or to movable property, provided the repairs are not of a capital expenditure. So देखिए again it's very simple. तो सीधी सी बात है, अगर कोई कंपनी है और वो कंपनी repairs maintenance पे खर्चा करेगी, the repairs and maintenance expense obviously is for the purpose of ensuring that its operations run smoothly, isn't it? So there was no need really speaking to include, because this is an operating expense. So the section should have very clearly said all the operating expenses will need to be deducted, and that it would have been automatically taken care of. So the moment you say expenses on repairs whether to immovable or to immovable property is to be deducted, that means what? That means people start getting a doubt. What doubt? Repairs are to be deducted, interest is to be deducted, but other expenses are not to be deducted. Why? Because they are not part of subsection 4 of section 198. So please remember, it is not so. Every expense which is normal operating expense will have to be deducted. If the repair is of capital nature, obviously it will not be deducted from the computation of profit for the purpose of section 198. Why? Because repair on which is in the nature of capital expenditure is not a revenue expenditure. Since it is not a revenue expenditure, obviously it will not be deducted in while computing profit as per section 198. Then you have item subclause G, outgoing inclusive of contribution made under section 181, and this I think is fair. So the clause J of section 198 subsection 4 says outgoings inclusive of contribution made under section 181, and section 181 is about company's contribution to bona fide and charitable funds. So if a company is making a contribution to a bona fide and charitable fund, now such contributions, remember, are not operating expenses of a business, yet they have been specifically provided in clause J of subsection 4 that such outings under section 181 in the nature of contribution to bona fide and charitable trust will be deducted. So not being an operating expense, yet there is a specific provision, and so such contribution will need to be deducted in computation of profit under section 198. Now clause K of subsection 4 talks about depreciation to the extent specified in section 123, which is on declaration of dividend. So section 123 is about declaration of dividend, and this section 123 talks about charging of depreciation. And remember, so for the purpose of section 198, while computing the profit, depreciation has to be calculated as provided in part A or part B or part C of schedule 2 to the Companies Act. So if a company has decided to charge depreciation which is lower than the amount provided in part A, part B or part C of schedule 2 of the Companies Act 2013, This will result into lower depreciation as a cost and debit to the P&L. What would be the consequence? What would be the net effect? The net effect will be that the profit of the company will stand inflated by the amount which is lower of depreciation, which is lower of the depreciation. So that means what? That means the managerial ceiling as per section 197 will be higher than what it would be, and therefore in case if a company has charged depreciation which is lesser than what has been provided in schedule 2 to the Companies Act, for the purpose of computation of profit under section 198, company will have to increase the amount of depreciation which has to be as per schedule 2 of the Companies Act, and thereby only then the profit computed as per section 198 will reflect the correct profit for the purpose of determining ceiling on the managerial remuneration, and also for the purpose of determining 2% of the amount that the company would need to spend on the CSR activities. Clause L of subsection 4, the excess of expenditure over income which had arisen in computing the net profits in accordance with this section in any year, insofar as such excess has not been deducted in subsequent year preceding the year in respect of which the net profits have to be ascertained. Meaning what? Meaning is very simple. So if a company has certain amount of loss computed while computing profit under section 198 in its past years, so any amount of loss that was computed in past years while computing profit under section 198 for the current year, remember these past losses will need to be deducted from the computation of profit under section 198 of the current year before arriving at the profit under section 198 of this year for the purpose of determining managerial ceiling under section 197, or for the purpose of determining the average amount of profit, 2% of which can be spent by the company on CSR activities. So any loss computed in earlier years under as per section 198, and that loss is carried forward while computing the profit of the current year, the past year's losses as per section 198 will need to be deducted while computing the profit of the current years as per section 198. Clause M of subsection 4 says any compensation or damage to be paid by virtue of any legal liability, including a liability arising from a breach of contract. This I can understand. If it is included as part of subsection 4, this can be understood. So sometimes it can happen, a company has to pay compensation or damage that may be arising on account of a legal liability, or it may be arising on account of breach of a contract. So one may tend to think that this is not a regular expense of the company, and therefore this expense should not be deducted. But this expense will have to be deducted, which is specifically mentioned in clause M under subsection 2, and that is any compensation paid or to be paid, any compensation or damage which is to be paid on account of any legal liability or arising from a breach of contract. Clause 9 of subsection 4, any sum paid by of insurance. So again, insurance is a regular operating expense. So really speaking, there was no need for including this as a separate item in subsection 4, saying that any sum paid by way of insurance against the risk of meeting any liability will need to be deducted. So insurance is a regular expense, operating expense, it has to be deducted. And then finally, debts considered bad and written off. So again, a bad debt which has occurred in the company is obviously an operating expense. So since it is an operating expense, it has to be deducted. But since it is included specifically, it is good, but it creates a doubts in the mind of people as to, since only debt which is considered as bad and written off is to be deducted, that means are there certain other items which are written off, will they not be deducted? So that is the point that we have to remember. So clause A of subsection 4 talks about any bad debt that the company has incurred in a year while computing profit as per section 198, those debts will need to be deducted. Now let's come to subsection 5 of section 198. Now the subsection 5 of section 198, the clause A talks about of sums that shall not be deducted. So subsection 5 talks about the items that shall not be deducted. And what are these items? These items are: number 1, income tax and super tax payable by the company under the Income Tax Act or any other income on the income of the company not falling under clause D and E of subsection 4. So remember, even though section 198 at many places referred to as net profit, but what is intended to be calculated, as I said earlier, is profit earned during the year, which can be termed as the profit from the operations of that year. So accordingly, any such tax, income tax and super tax payable by the company, as we discussed earlier also, will not be deducted while computing profit as per section 198. Likewise, clause B of subsection 5 talks about any compensation, damage or payment made voluntarily, that is to say otherwise than by virtue of a liability, will also not be deducted. So कोई खर्चा है आपको करने की जरूरत नहीं है लेकिन आप उसको कर रहे हो, कोई डैमेज है आपको पे करने की जरूरत नहीं है लेकिन आप उसको कर रहे हो, तो any such compensation that you pay, any such damage that you pay to someone, remember you are doing it voluntarily, it is not part of your business, it is not part of your operations, and therefore any such payment that you make in the company while computing the profit as per section 198, any such payment shall not be deducted, shall not be deducted. Clause C of subsection 5, loss of a capital nature. So remember earlier we discussed the profit of capital nature, we discussed, and we came to the conclusion that the profit of capital nature while computing profit as per section 198 will not be included as part of the income. Likewise, capital loss of capital nature will also not be deducted, because let's say for example a company is selling an asset or a division or a plant, and on sale of that division or sale of that plant, company is incurring a loss. Now if you deduct this loss from the computation of profit under section 198, what will be the net effect? The net effect will be the profit as per section 198 will deflate. So when the profit as per section 198 will deflate, because you have included a loss of capital, you have included a loss of capital nature while computing profit as per section 198, what is going to happen? The amount which is going to be available for the purpose of determining ceiling for the managerial remuneration is going to be lower, and that means the amount that would be eligible for the purpose of being paid as managerial remuneration will be lowered, and that would be unfair to the managerial team, and that is your clause C of subsection 5. Likewise, clause D of subsection 5 talks about any change in carrying amount. So earlier we discussed any increase in any asset on account of fair value measurement. Any such increase we discussed will not be included as part of the income for the purpose of computation profit as per section 198. So likewise, as per clause D of subsection 5, any change in the carrying amount of an asset or of a liability recognized in equity reserves, including surplus in profit and loss on account of measurement of the asset or liability at fair value, now that also will not be deducted. So कोई fair value measurement में किया, So because of the fair value measurement, the value of the asset has gone down or the liability has gone up. As a result of that, what is going to happen? There's going to be a loss of capital nature. Now this loss of capital nature, as specified in clause D of subsection 5, will not be deducted while computing profit as per section 198. So friends, this is how we have discussed the 4 broad categories of different items as specified in section 198 one by one. Now before I conclude, one question that must be coming in the minds of every one of you: where should I start from? I am working in the finance department of a company, I am working in the accounts department of the company, or I am auditor of a company, or I am a company secretary of a company, or I am an advisor of a company, and I have to advise a company as to how to compute the profit as per section 198. So the question that comes to my mind is, where do I start it from? So remember, firstly we have to be very clear that the profit before tax arrived at following the accounting gap is not the profit under section 198, and that we have to be very, very clear about it. So the profit as per section 198 and the profit that you arrive at following the accounting standards for the purpose of financial reporting are not same. That is what we have to be completely clear. Number 2, we have to remember that profit as per the accounting gap and as per section 198 is absolutely unlikely to be same ever. तो पूरी दुनिया में, पूरे हिंदुस्तान में किसी भी कंपनी का अगर हम सेक्शन 198 का प्रॉफिट कैलकुलेट करें और वो फिगर को देखें, कंपेयर करें विद द प्रॉफिट पीबीटी फिगर विच इज अराइव्ड एट for the purpose of financial reporting, these two figures will never be the same, and that is what we have to remember. Number 3, computation of profit under section 198 has to be done separately. It has to be a separate working where all the provisions, all the subsections of section 198 will need to be duly incorporated. So the profit computation under section 198 is going to be completely a new statement altogether. Number 4, what can be the starting point? Starting point can be the trial balance itself, resulting in the fresh computation. So when we have to compute profit as per section 198, where do I start from? Remember, I can start from the profit before tax as given in the reported financial statement of the company, and make all these adjustments that I have just spoken with you with regard to section 198. तो हमें क्या करना है, जो भी सेक्शन 190 सेक्शन है उसके जो भी सब सेक्शन है, 5 सब सेक्शंस हैं, वो सब 5 सब सेक्शंस में जो प्रेस्क्राइब किया हुआ है, जो प्रोविजंस हैं, उसके हिसाब से हमको कंप्यूटेशन करना है एज पर सेक्शन 198 यूजिंग द ट्रायल बैलेंस और यूजिंग द प्रॉफिट बिफोर टैक्स. Likewise, you can also start this computation. So when you have to compute profit as per section 198, remember, you can start from the trial balance itself, which means it's going to be completely a fresh calculation. You can start from the profit before tax. That means you will have to make certain adjustments. Can start from EBIT, you can start from EBT, you can start from EAT, you can start from the EBITDA, or you can also start from gross profit. You only have to remember that while computing profit as per section 198, you only have to remember adjustments are to be made of the income and the expenses so as to ensure that the profit that you arrive at in the bottom is profit that you can confidently credit to the managerial team. You can say that this profit that we have arrived at is on account of the direct contribution of the managerial team, and that is what fundamentally you have to remember. So friends, in any case, please remember, irrespective of which is the starting point, doesn't really matter कि आप कहाँ से स्टार्ट कर रहे हैं, ट्रायल बैलेंस से स्टार्ट कर रहे हैं, ग्रॉस प्रॉफिट से स्टार्ट कर रहे हैं, एबिटा से स्टार्ट कर रहे हैं, ईबीआईटी से स्टार्ट कर रहे हैं, ईबीटी से स्टार्ट कर रहे हैं, ईएटी स्टार्ट कर रहे हैं, doesn't really matter as to where do you start from. When you calculate profit under section 198, irrespective of where you start from, the ultimate profit figure as per section 198 has to be same. It has to be same. It cannot be different. And that is the section 198 for all of you. That is the section 198 for all of you. And once again, so let me thank all of you. In case if you have any doubt on this, in case if you have any query on this, you can always send me a mail on my mail ID pramod7jain@gmail.com, or you can send me a WhatsApp message on my number 9766034562, or while viewing these YouTube videos, you can also send me a message as with regard to your query, and it would be my endeavor that I answer and clarify your query, your doubt to your satisfaction. I am very happy to also inform you that there are 900 videos which I have already uploaded on my YouTube channel, and all these videos cover a wide spectrum like valuation exam, insolvency exam, finance for non-finance, advanced financial management, costing, work-life balance, leadership, and so forth. So you can subscribe to my YouTube channel and benefit from all these videos that I have uploaded exclusively for the benefit of every one of you. Now, in our next session, we would be focusing on section 196 and section 197, and thereafter we would be focusing on section 135. Friends, I am also going to cover in due course with all of you CARO and ENFRA and many other significant provisions of the Companies Act. As a matter of fact, you can always suggest any topic that you would like me to cover in my videos, and I would be very happy to do that. Thank you so much, and wish you all the very best. Thank you.